Hey everyone, welcome to another episode of Bitcoin Law Review with your host, Tone Vase. We have a couple of lawyers to start off with today, and then a couple of more will be joining us. We have a new addition to the show today. Welcome, Manny Alejandro. Did I pronounce that right?
Alejandro, close enough.
Thanks, man. Go ahead. Tell us a little bit something about yourself. You are new to my channel. My audience is not familiar with you or your work. And then we'll go to our usual suspects.
Sure. Well, thank you. Happy to be here and happy to join you. Thanks for the invitation. So I'm an attorney in private practice in New York, and I recently ran for New York State Attorney General, and I actually ran on a very pro-crypto platform. I accepted Bitcoin for campaign contributions, firstly, which I think is pretty awesome. Secondly, I was passionately against the New York bit license. And actually, made public statements about why I thought it was preclusive. Wall Street Journal picked that up. ETH News picked that up. So I got a lot of traction in that. I suspended my campaign in June, and now I'm back at it. So, trying to get actively engaged in the crypto markets and working with various clients in the space.
Gotcha. Oh, one question. There was like a lawsuit from some bodega grocery store owner against the bit license. Were you involved in that case or no?
I was not. No, I was not.
Okay. But you are aware of it, right, here in New York, or?
Yes.
Oh, okay. Yeah, I'm curious how that actually went. I haven't. Last time I just rang a bell. I remember it from like a year ago. I have no idea if that actually gone anywhere. All right, Drew, how you doing, man? Thanks for joining again.
Hey, Tone, thanks for having me, guys. A pleasure to join. For those who don't know, Andrew Hinkes. I'm General Counsel of Athena Blockchain and an adjunct professor at NYU School of Law and NYU Stern School of Business. Thanks for having me.
Hey, thanks for coming on. And David, you're like our biggest regular right now.
David Silver, no cases moving at the moment. I am the guy
so you got time. You got plenty of time on your hands right now.
I got nothing but time. I'm actually here a little hungover today, wearing a hat. I'm actually on a staycation for the rest of the week, going now to Fort Lauderdale, hanging out on the beach. So,
I'm supposed to be the resident alcoholic on my shows. You're trying to take that title away.
Very much so. I was out till 2 a.m. I'm too old for this stuff.
Hey, what are you doing?
What was that, Drew?
I said you have kids. I thought your life was supposed to end at that point.
Oh, well, the problem was I had a meeting last night that ended early, and my mother-in-law is watching my kids. So my choice was to go home and hang out with my mother-in-law, or go 30 minutes to the beach and hang out with my wife and my friends.
There you go.
It was option 2.
Well, yeah, either that or he was celebrating. You love Tezos. That's like your, just like Leah loves EOS, you love Tezos. And they're about to fork because they hate KYC. So that's like all over your life right now, right?
It is. I love Tezos. I love the Brightmans. Kathleen's out talking again, telling everybody what she thinks. I mean, to me, Tezos is the best thing in crypto because it truly represents everything that's right and wrong in crypto at the moment. Believing that they have a transformative technology, and that's true. I won't argue the merits on that at the moment. They raised a shit ton of money. They haven't really done anything with the money they raised, except they have gone back to try and legally, retroactively impose certain limits and limitations on the people who gave them money, starting by they called it a donation. The people got upset and offended at the word donation because it wasn't really a donation. Now they are self-imposing KYC. Arthur Brightman came out and said, I'm against this. I don't believe in KYC, but you kind of have to follow the rules nowadays. And now there's this group who's saying we are anti-KYC. You are not entitled to know who I am. And they are going to use, is it on there? I just like it. They're going to demand a fork. They're going to take legal action. They're going to do anything and everything to stop the KYC. Probably is someone, who's 14 years old and lives in their, parents, third bedroom in the house upstairs to the left. But hey, everyone's allowed to have an opinion on Twitter.
Yeah, no, this is great. We might have this as a standalone story. Now, if you really think about it, this wasn't supposed to be on one of our stories, but it just came up right before our show. If you really think about it, right? Like if you, I am 100% convinced that every one of these ICOs that collects money is pretty much an unregistered security. There are numerous violations everywhere. But if these guys anonymously fork that entire code that was built, maybe with that money that was raised, the fork side of the code being run by anonymous people, you can't take them to court for creating an unlicensed security. So this creates like potentially a beautiful premeditated plan to get around the whole concept of Tezos as a security. And the guys that go down for it are the guys that say, well, we never got a chance to launch it. Some anonymous people took everything and they're the popular ones now. And the court might have to prove that it's the same people.
So Tone, there's this concept in crypto that I think is going to fall out of fashion. And the concept is that if there's this thing that would subject somebody to liability, if you decentralize it, then all of a sudden, like everybody who participates gets off scot-free no matter what. That's kind of not how the law works. Nature abhors a vacuum, and the law kind of doesn't really like when there's a harm being perpetrated. And because somebody does something clever or cute, there isn't somebody to go and seek redress against. I was posting about this on Twitter earlier today. I don't buy that a business that would be subject to some compliance obligation that then decentralizes itself somehow is exempted from those obligations. Legislation.
Well, so I have to interrupt you, Drew. Like, that's exactly what it sounds like is going to happen with Ethereum, unless I see otherwise. So far, the public statements by the highest ranking official on the situation of Ethereum is saying the complete opposite of what you and I expect.
If you're talking about Heineman's statements, he talked about what happens post-issuance. None of those more recent comments talked about issuance. There is still yet to be anybody in any context that has definitively said Ethereum, when issued, should have been issued pursuant to the securities laws or not. Everybody in this panel probably has an opinion, but my opinion is worth about as much as David's or Manny's or yours. It's not. I'm not a regulator, so it just.
Yeah, I think what, and this is where Drew and I probably agree. You know, just because Hyman said something about what was happening after they believed the decentralization happened, obviously I don't agree with that. But they carved out the sale. But more importantly, there's something called a deferred prosecution agreement. There's working with the regulators. I'm a big believer that Vitalik at this point basically should have like a scarlet letter of the U.S. government impaled on his chest. He is working with them, and there's going to come out, there's going to be some type of slap on the wrist fine. It's going to sound large, but whether it's $1 million, $1 billion, it's going to be a number, but he's working with the government to help. And this is what I call crypto 2.0. Whether it's fair or unfair that some of these companies got a leg up, they did. And I think that's, the government is a blunt instrument. It's not a precision instrument. They're going to pick a couple of companies and people to go after. I think Tezos is going to be one of them. I think Ethereum, the foundation, and Vitalik has chosen wisely, if I'm right, to work with the government and be a validator of the technology in the 2.0 world.
I'm gonna let Manny chime in on this, but I'm gonna disagree with you, David, and I'm gonna say I would have agreed with you if Vitalik was, circling around Canada or North America. But all of those rumors between Vitalik and Russia make me assume that he's not working with the U.S. government. And if there is a government he's working with, it's the Russian government.
Oh, wait, and the Russian and U.S. governments aren't working together right now on anything?
Really?
No, not on. I doubt they'd be working together on this. Manny, you want to chime in here before we actually
sure.
Stories?
Yeah, that's sure. I would agree. I would agree with the comments both of David and Drew. I mean, look, time is never a consideration for the regulators, right? Meaning that the regulators could always go back in time. I think what you'll see here is what I'll call selective enforcement, right? So I think the regulators will eventually come down, and they'll come down with some type of fine to really send a message. But I can't imagine total exoneration. I really can't. I just can't see that contemplated. It's just not the way things, have moved forward in the past, and I just can't see things moving forward in that same way right now.
Again, I'm going to slightly disagree because there are so many interests that lobby the government and lobby regulators that are financially incentivized for Ethereum not to even get a slap on the wrist. Thoughts?
Well, who's not getting the slap on the wrist? You just don't know the slap on the wrist. Drew and I have talked about this extensively. We're both big believers in 2020, 2021. We're not
huge years for criminal defense attorneys.
All right. So I think it's time for us to move on with the first topic. We got some people watching. The intros are pretty much done. Let's go to. We'll start. Oh, not doing screen share right now. Let's get back to screen share. Drew, we're gonna pick on you first because you sent out this tweet that reads, "Hey, crypto investment world. Here's the proposed new definition of accredited investor. Would require FINRA or another SRO." What does SRO stand for?
Self-regulatory organization. We'll talk about that.
To verify the new education or job experience qualifications. And then you reference the bill itself. So here's HR 1585 that specifies what is a qualified investor. So I want to just read the first part for the audio podcast. And it says, so section 2, definition of accredited investor, part A, in general. Okay, so it references the Securities Act of 1933, part 1, by redesigning clauses 1 and 2. Okay, so it's the redesigned stuff. Okay, so here it is. Any natural person whose individual net worth or joint net worth with that person's spouse exceeds $1 million, parentheses, which amount along with the amounts set forth in subparagraph C shall be adjusted for inflation by the commission every 5 years to the nearest $10,000 to reflect the change in consumer price index for all urban consumer prices. Okay, so it's inflation adjusted. Work for a person of calculating. Now, the interesting things are, of course, further down where it says any person who has an individual income in excess of $200,000 in each of the 2 most recent years, or joint income with a spouse in excess of $300,000 for those years, and has a reasonable expectation of reaching the same income level in the current year. And I want to read the last part, the experience thing. That's part E, right? Yeah. Any natural person the commission determines by regulation to have demonstrable education or job experience to qualify such person as having professional knowledge of a subject related to a particular investment, and whose education or job experience is verified by the financial. So basically, you don't have to meet those financial requirements if you can prove that you know what you're doing from, I guess, either like you're like a famous person. I'm sure Twitter followers don't necessarily count, or an expert in a field like a professor in the subject. And this is interesting. I just want to before I throw it to you, I'm going to say when I was the one ICO, I did research that I consider to be the least scammy of all ICOs, at least from what was told to me during my research. I don't know if that's how it's acting now or that's how it's launched. I have no idea. That was the BCAP token from Blockchain Capital. They were raising $100 million in qualified investor money, but they only raised 90 million from qualified investors, people that fit this definition. And then for the final 10 million, they created 10 million tokens, the BCAP token, and every token was sold for $1. And each of those dollars added up to $10 million. That was added to the pool of funds that was to be invested with the VC. And the only thing that ICO token does is they use regulation S and D, I'm not sure what else, to sell it to people outside of America in $1 increments into the VC. And now they can simply move that investment around through the exchanges. So it gives you liquidity on a small amount, but it has an underlying backing through that VC. So when I was talking to Brock Pierce at the time, we talked about the accredited investors for the 90 million. And he actually told me that I would qualify to be one of those accredited investors without meeting those requirements financially, because they can justify me being an accredited investor based on my expertise in the crypto space and based on my social media and media status in general. So I found that very interesting, and I definitely learned something during that interview. So Drew, I give the floor to you. Tell us more about this.
Thanks, Tone. So the idea of an accredited investor is essentially to make a shorthand for the people that the government thinks can take on riskier investments. Regulation D has a number of subparts that provide for exceptions from the requirement that people who sell securities register them. The most commonly used one in the crypto world when people are selling tokens is the 506C investment. And that allows people who are selling private placements of securities to sell them to people who qualify under this definition of accredited investor. I wasn't part of the conversation, Tone, but I'm guessing that if somebody told you that you were an accredited investor, they might have been looking under the existing definition from Reg D that says that the person has such knowledge and experience in financial and business matters that he's capable of evaluating alone or together with other purchaser representatives of the purchaser, or together with the purchaser, the merits and risks of the prospective investment. That is a bunch of words that are pretty flexible. I could tell you that David and I, if we spent 5 minutes, could find two really different definitions of what that phrase means.
Yeah, I mean, that's an exception that swallows the rule.
Yeah, it's as broad as the Grand Canyon. So notwithstanding that there's probably lots of case law interpreting that, there's a House bill that you referenced that seeks to bring a little bit of clarity to the non-financial types of exceptions. And the House bill introduces this new sub-E that says any natural person the commission determines by regulation to have demonstrable education or job experience to qualify such person as having professional knowledge of a subject related to a particular investment and whose education or job experience is verified by FINRA or an equivalent SRO. So here's what this means. Right now, for individuals to participate in several investment opportunities, including what most of these, the terms by which most of these ICOs are now being offered, they need to be an accredited investor. They need to be able to demonstrate a certain financial status, either the net worth requirements that you mentioned or the income requirements that you mentioned. They need to be able to provide proof to the issuer. The issuer has to do some really basic data collection and diligence, and then they get sort of whitelisted that they can participate. What this does is it opens up a new avenue for folks who may not qualify based on the net worth or income requirements to participate. Now, what does this new exception or this new qualification actually say? It says that it's a person that, pursuant to the commission's rule or regulation, has education or job experience. Nobody can tell you what that means right now, because they have delegated the idea of defining that to FINRA or another self-regulatory organization. Now, what's a self-regulatory organization? Essentially, the Securities Exchange Commission has 3 or 4 significant legislative enactments, 3 or 4 laws that give it its powers. And it made the decision that it was not going to police all participants in the capital markets. It was not going to police all broker dealers and all RIAs and all other people who were active in doing business under the securities laws, but instead directed the community of participants to come up with their own organization that engages in its own rulemaking and engages in its own policing of conduct. The biggest one is FINRA, the Financial Industry Regulatory Authority. And so the consequence of this exception is if it passes, FINRA is going to have to figure out how to come up with a metric to determine whether Tone Vase has demonstrable education or job experience to qualify him for a specific investment. So a lot of ideas have been tossed around as to how this would work. And there's a couple of things that have to happen. First, somebody would have to figure out what the investment is. If it's a crypto investment and somebody's a lawyer that practices securities law and teaches a crypto class at NYU, they probably have job experience. I don't know whether somebody who's active on Twitter would be sufficient. That gets really subjective. So what's the way to work around that subjectivity? Some have suggested that there should be a knowledge or skills-based exam. That might make sense. The problem with this legislative enactment is it's subject related to a particular investment, which means that there's going to have to be somebody at some SRO that's going to be fielding inquiries related to Reg D private placements. And these run the gamut from technology startups to real estate investments to anything you can think of. So the SROs like FINRA, should this pass, have a lot of work to do. They're going to have to figure out how to come up with a principled way to qualify people. I can't see FINRA or an SRO coming up with a new department that expressly sits there and reviews resumes and does interviews to qualify people for investments. Skills-based test makes some sense. But if anybody else on the panel has some ideas of what other strategies might work, I'm all ears.
Yeah, and whoever jumps in next, can you also define FINRA for us? What the hell is it, and what do they do?
I could take it. I could jump in. So I worked for FINRA in a previous life when it was NASD, National Association of Securities Dealers. So FINRA is a self-regulatory organization, as you mentioned, an SRO. So they were created in 1938 under the auspices of the Maloney Act. So there's a differentiation between them and the SEC. So you become a member of FINRA effectively when you want to open up a broker-dealer. In addition, FINRA manages both the web CRD system, which handles all registration. So if you become a registered rep, you would register through web CRD, which is managed by FINRA, and the administration of that exam, as well as IARD, which is for the investment advisor registration depository. So that's for people who are on the investment advisor side, Series 65, Series 66, etc. So essentially what this is to me, this is a bit of a land grab here for FINRA, because I really don't see FINRA having jurisdiction, direct jurisdiction over this. I guess an examination would be one way of doing it, potentially, because that would take the discretion out of FINRA's hands. I think that could be potentially the worst thing that could happen, is for someone at FINRA to have evaluative criteria to make a determination if someone has the requisite experience. My concern is, though, if it's an examination, does someone prepare to take that examination? So someone who doesn't have the experience based upon their background or their employment, now they study for an exam like they would the Series 7, learn how to pass an exam, gives them the requisite experience. I'm not sure if that meets the spirit and the intention of the rule. Secondly, again, jurisdictionally, does FINRA have jurisdiction over someone who takes an exam at that point? Because now you're taking an exam, you were an investor in a private placement effectively and deemed an accredited investor. Now all of a sudden you have to register with FINRA. Not quite sure mechanistically how that works jurisdictionally, if there are any issues around that. I understand the need to clarify this, but at the same time, I'm not aware that there were any issues in the past where someone was a professor or someone was a lawyer or someone who was well learned in that particular space or in the capital markets who didn't otherwise meet the financial thresholds for an accredited investor definition, still was able to participate in a private placement. So right. At the end of the day, I don't really see the ultimate need of this. I think it actually confuses things from my perspective.
Well, so it brings into question, why we're doing this at all. And the short answer is that private placements are deemed riskier, and probably based on some market analytics or research, people can find that investments in registered companies are probably more stable, more robust, and less risky than in private placements. And so this is part of the SEC doing its job of balancing its dual aims of facilitating capital formation and providing for consumer protection. These are riskier investments, and so the SEC, and what some probably view as a paternalistic move, is trying to limit the extent of the damage that can be perpetrated systematically through the economy by limiting who is able to get to these higher risk investments. A lot of people think that crypto exists to allow people to avoid regulation, and God bless them, they are living in a different reality than I am. Public blockchains certainly have a different set of attributes, and people are doing a lot of different things on public blockchains than they are in these private issuances. But the reality is that these laws emerged after decades of people ripping each other off and rendering each other destitute by taking advantage of each other in fraudulent offerings. So, is an accredited investor the best way to do this? Probably not. Has it so far been a practical way to weed out people who have the ability to suffer a massive loss on a risky investment? Maybe.
So I'll jump in and dumb down what Drew just said, because I think most people listening are like, what did all of that mean? And while Drew was, as usual, technically correct in everything he said, it's a little complicated to pull out what the actual practical meaning is. So the basis of this is simply to expand the pool of people who can invest under an exception. And what they're attempting to do, and I personally think quite poorly, is allowing people who don't have enough money to qualify as a accredited investor get in under the guise of education and job experience. And this typically goes to, when I talk to people about their investment advisors, they always ask, how can you tell a good investment advisor? My response is usually, well, the first thing you should do, if they ever declare bankruptcy, or if they're bankrupt right now, see, how they live. Would you give a guy $1 million who can't manage their own money? Probably not. Do I want education and job experience to mean anything if it comes into the fact that you personally, let's use Tone, for instance. Do I think Tone should be an accredited investor if it turns out that his net worth is negative $300,000 and his tax returns say that he loses $30,000 a year because he can't hold down a job? If he has those type of statistics, chances are he would have been pushing BitConnect and would have been, scamming for BitConnect. So I'm not a big fan of education and job experience giving an outlet, nor do I understand how a regulatory body is going to police this, because essentially there will ultimately be just a pool of people who get in, and it's just a way to beat the system and call someone an accredited investor. So,
right. And the reason we're talking about this overall is the fact that, now that people are offering cryptos as what the US law calls an investment product, they don't have a choice except to use exceptions. To register one of these would require years of operation, audited financials, and for a variety of reasons, startups just can't register. So if they want to not violate the law, they have to use one of a couple exceptions. The Reg D that we talked about is the one that requires accrediteds, and the exception that allows issuers to sell internationally is called Reg S. And those are the two exceptions that are paired together that are used most frequently. They're not perfect.
So let's just be, what is Drew saying? They are trying to expand the pool of people who can join the investments. And the reason why there's such a euphoric, cataclysmic event right now, anyone can jump into an ICO and invest. There's no limitation on the accredited investor. At least there wasn't until Telegram and some of the bigger, fancier ones started doing, actually selling them properly under Reg D. But essentially, to make this pool bigger, there's two ways of making the pool bigger: lowering the amount, which they didn't do, or expanding who can participate in it. And from my perspective, now I am obviously a guy who's very pro-regulation. I believe that, a lot of these were unregistered, a lot of the ICOs were unregistered sales of securities. But I'm at least supportive of, because I don't think this particular bill was written with crypto in mind, but it's certainly written with the eye towards involving more people, which is the whole point of what's going on in crypto right now. Getting a group of investors who clearly have money that they want to put into some form of investment system and getting them into doing it through an exception. For that, I actually support the rule. I just don't think it's practical in how it's going to be applied at the moment, but that's a discussion for another day.
Yeah, we had an audience question, but you guys just answered it. Someone said, what happens if you are not a U.S. Resident? And well, then you have to hope that, if you qualify with the U.S., this is my assumption, right? If you qualify, even as a non-U.S. citizen, if you qualify under the financial definition of an accredited investor, you have either $1 million of liquid or you make a bunch of money, then it doesn't matter. If you don't qualify under those, then you have to hope that whoever is selling you this follows Regulation S, and then you can invest in very small increments. That's kind of my understanding. Yes, no, maybe.
Anyway, let Manny jump in. I don't keep on jumping over Manny. Manny, come on, man. You gotta knock in here and you gotta knock Drew a little bit. You gotta.
No, we
I'm
can't.
being too nice. Yeah, I'm being too nice. Yeah. No,
Did Drew put you to sleep?
Oh wait, guys. So I do want to move on to the next topic, which is a lot more interesting. I will ask this, right? So we just explained what the law is. Now I am perfectly happy with the current. I mean, maybe they could have lowered those financial requirements a little bit. Maybe they could have lowered them to like 800,000 instead of $1 million. Maybe they could have lowered it to, let's say, $100,000 salary, not a $200,000 salary. But I think that those qualifications are very, very reasonable for speculative investments. And these ICOs are more speculative than I have ever seen. And
Congress. Tone, so does Congress. They're the ones that make the laws. Okay. If you don't like these laws, call your congressman, get the law changed. Call your lobbyist, get the law changed. Call your lawyer, figure out what your recourse is. If you don't like these levels, if you don't like these numbers, well, what can Congress do? They can change the laws. They're changing it right now with this new E, or they can suggest a new exception, right? That's what Reg A plus and Reg CF were intended to do. Reg CF makes a really low threshold for investment. It makes it a lot easier for people to participate with much lower barriers to entry, but you can only raise $1.07 million with Reg CF. So for a variety of reasons, it doesn't make sense for crypto projects. Reg A plus, tier 2, you can raise up to $50 million every 18 months. And it's a lot easier and more accessible than a full registration. The issue there is you actually have to file paperwork. The SEC has to review it. It costs more money and it takes more time. And the governmental entities, including FINRA, are slow rolling apparently the A pluses right now. They're not really getting through. So look, you don't like it, call your congressman or woman and ask for a change.
Yeah, I don't have a problem with the thresholds. I think the thresholds, are reasonable, particularly in today's economy. My only, I understand the spirit of this and the intention behind it. My only question is to, by introducing this, I think it's bringing in further ambiguity and confounding the process, right? So when you bring in another governmental agency or SRO and you leave it somewhat discretionary to them, I think it's actually making matters worse. When I learned this in law school and learned this exemption, and Drew will appreciate this, this was deemed to be like the nutty professor exemption. It was for people who never made enough money to meet the financial requirements, but they actually were so sophisticated in the market that they would be able to participate in private investments. So, I think it's worked in the past. I get the intention behind it, but I think it needs more work. And having FINRA mandate it might not be the best, perspective from my point of view.
Well, really what this is it's punting the issue over to the SROs and saying, people want this. Hey, FINRA, go figure it out.
Exactly. So the SEC is saying you're getting what you want. We're just not deciding what to do with it.
And like in a bigger macro scheme to finish it off, I find it like now that I'm a little older and I guess I start to appreciate some of the regulation, especially the ones surrounding, investment regulation. I start to understand it a lot better. And like everyone wants to remove regulation, except when you remove Glass-Steagall, you end up with the 2008 financial crisis, right? So everyone wants to remove regulation until a bubble blows out of control, and then everyone blames everybody else, and not the fact that the removal of Glass-Steagall had a lot to do with it, because now commercial banks became investment banks.
Oh my God.
Look, there are plenty of people who, for philosophical reasons.
Boy, David's gonna yell at me. Go for it, David.
Oh my God, you quoting like an Aaron Sorkin, West Wing episode right now?
No, I've never watched the show. I've never watched the show. I just lived it.
Oh my God, you should go watch like the opening where he rails against how Glass-Steagall caused the economic meltdown. It'll give you a good little meme to do a Twitter takedown. No, I mean, look, I'm pro regulation. Drew, was the C exception, is that new, rewritten? I don't remember the income thresholds being written this way. For the
we're looking at
2 years.
Yeah, what Tone's got displayed is the bill. The prior version is written slightly differently.
Yeah. I mean, because that's another way you're going to include a lot of people that fall into that economic threshold for 200,000 in the 2 most recent years. That might actually be the largest expander in there, because think about it. You can make $200,000 a year and spend $250,000 a year and now be an accredited investor. So that might actually be the largest loophole in there.
Well, hang on a second. The existing regs include, they talk about net worth. I agree if it's just income by itself, then you can be massively in debt and the person isn't necessarily sophisticated or wealthy, right? So income just talks about liquidity as opposed to value.
Well, that's what I'm saying. I don't remember the rule being written this way, that there was an income threshold that got you into being an accredited investor.
Yeah, if you look at the CFR, and I'll drop the link to Tone right now so that he can put that up. It talks about netting it. It talks about how the value doesn't include your home, because most Americans are actually, they carry their wealth in their home as opposed to anywhere else.
Right. It says here that your home doesn't count.
Yeah.
Right. Yeah. So it's $1 million. Right. It's $1 million net income less the value of your home, and then it's the 200,000. So each of these are independent prongs, which is why what we're talking about is important, right? So it's not and, it's ors.
That's my point. This is a large expansion on the or, that you're going to get a lot of people that can jump in based on that prong.
Correct.
And really, we're getting to the point where, given the way that people are using crypto issuance, we've really bifurcated the world from public network systems that are mined and that rely on proof of work and economics in order to distribute their tokens, and people selling investment products using a novel distribution mechanism. In my view, there's like 3 buckets of activity in this world now. You've got the public networks like Bitcoin, you've got the people selling tokens, and then you've got the private chains. And they're 3 different worlds.
All right, guys, I'm going to have to ring the bell here. We're going to move on. I just have one yes or no question I want everyone to answer. We'll start with Drew, then Dave, then Manny. Do you think the rich get richer because they are able to invest in very speculative seed rounds of companies? Yes or no, Drew?
Yes.
David?
Yes.
Manny?
Yes.
I say no. I'm on the other side here. I'm gonna
really?
be contrarian. I'm gonna be contrarian. I just I don't believe that go play the lottery. I think that investing in very speculative, very early companies is probably less statistically profitable than a lottery.
I don't disagree with that, but do you know Shaquille O'Neal has made more money in his seed investments than he did in playing basketball and endorsements?
Don't surprise me.
I'm assuming everyone knows who Shaq is on this.
Yes.
I give it a little bit of time. I also, hey Sasha, thank you for joining us. Give it a little bit of time, because Shaq is again, this is early, and it could be he's getting lucky, because I remember like the special, another baseball player that clearly seemed, potentially like with brain damage. He was being there was a special on him, how he was like one of the best traders.
No, Lenny Dykstra is completely different.
And then he was broke.
High yield option, but Shaq in the early 2000s got in on seed rounds of Google, different California things. He's made like there's I was reading the article. I'm blanking on the number, so I want to throw numbers out there. But he's made a ridiculous sum.
Okay, so one more question at you then. Do you really think Shaq made those decisions himself, or he had advisors?
I think he had advisors.
Right, but if you bring this concept that anyone can invest in speculative A rounds, how many people in the world will have advisors to the level of Shaquille O'Neal? They'll be making their own decisions.
Well, hold on. Now you're changing the question.
Yeah, it's a different question.
If we randomly...
wait a minute. Okay, fine. But if you're going to use Shaq as an example, then you have to assume that anyone else investing in these kinds of things has the same kind of access to advisors than Shaq. If Shaq is rich and Shaq made every decision on his own, do you think he would be a successful A-seed investor?
Well, but the question was, do the rich get richer? The reason the rich get richer is, and this is a Donald Trump quote from Art of the Deal, pre-President Trump, if you hire a good professional, they should get you a minimum 3x return on what you pay them. The whole Shaq thing is the rich get richer because they have better advisors who can pick out the better investments.
Well, right.
Obviously, that's not.
Wait. But that's because they're rich and they can afford advisors, right?
Well,
like
that's your question.
Well, okay, fine. I'll rephrase the question. My question
It's like talking to my wife. It's like talking to my wife. I answered your question.
But I'll make the question more specific. If you allow anyone to invest in pretty much anything at any stage of a company, do you think this is good or bad for, the average person?
Oh, that's the question? Bad.
Manny?
So you rephrased the question now. Yeah, I think it moved from good to bad. But what I wanted to say is that, look, statistically, it's proven all these venture capital firms, all these VC firms, right? They know their batting average is very low. Okay, so they know that, say they make 10 investments, hypothetically, one of them hits, but the rate of return on that one hit exceeds their losses. So yes, it's risky. It's risky for people who are not sophisticated, don't have the means to absorb the loss, to just throw their money at something. But if wealthy people could afford to lose money and they invest in that, the nth investment, that could just, tip the scales in their favor. So it's a bit of a conundrum, right? In terms of, you need to find that investment that really hits, because there's plenty of investments that won't, but the one that hits compensates for all those other investments that don't hit and work out.
Right. No. The point that I'm trying to make is if we eliminate all laws on accredited investors, is this a good thing or a bad thing? That's the yes or no question.
I think it's probably net bad. You've got folks who, look at crypto, right? We love crypto. We wouldn't be on this show if we didn't love crypto or if we didn't find something about it that excited us. But there's an exceptional amount of fraud, and there has been an exceptional amount of fraud in crypto. You've got the patent offering fraud, which is what we've seen enforcement actions about. We've got the fraud, or at minimum, inability to live up to promises that were exposed by the research report published by a couple of gentlemen out of Penn that talked about how few of 2017's ICOs actually did what they said they were going to do in their white papers. I think we're going to find that there is just an extensive amount of fraud, breach of contract, failure to live up to promises in this area.
No, Drew, we're going to talk about that now. Last story, a 100-page report has come out.
And I'm leaving in 2 minutes, so I'm finishing up here.
Yeah. How much time do we have you for? Oh, Sasha, you want to comment real quick? If we eliminate accredited investors, a good thing or bad thing? Yes or no?
I wish I had heard what everyone said earlier, but my natural thought in the crypto space would be that we don't need these accredited investor laws because the people that are coming into it have a duty to research what they're buying. That's probably not a very popular opinion among the other people on here, I suppose, because they've seen a lot of the fraud firsthand in the lawsuits. So I guess
you're going to be very popular with the live chat.
That's because she's wearing great glasses.
It takes a lot of work to figure out how to buy into a lot of the ICOs. You have to be fairly tech savvy, and if you have enough skill to figure that part of it out, you also have enough skill to either watch, shows like your crypto scam episodes, or just go on Reddit and see what it is you're investing in and what you're getting in return.
All right, guys. Let's move on. Drew, how much time do we have you for?
I've got like 5 minutes. Hi, Sasha. Way to win the popularity contest already.
Yeah, I know. It's over.
Drew, we're going to have you go first. So Augur went live, and as expected, well, I have a bigger view on this, but so there's a huge controversy over the assassination markets that have popped up on Augur. There was a whole article written about it. I'm not going to show links to Augur. I've never actually been to the Augur website. A lot of interesting tweets, though. Very ironic ones, like Vlad Zamfir, one of the guys that currently involved in Ethereum, talking about immutability, which Ethereum doesn't actually have, and referencing this tweet that says first assassination markets are starting to pop up on Augur, betting on Trump, already has more than 50 shares staked. I'm not sure what they mean by shares. Like I said, I haven't looked into any of this stuff. Other people are being named. Oh yeah, that's the tweet that he was actually referencing, so I can close that one. Peter Todd commented, so it looks like people are now debating which assassination markets are ethical and which aren't, referencing this tweet. Anyway, so my view has always been, and maybe I didn't make it very clear, I did a crypto scam Augur where we mostly talked about the technological downside of Augur and the fact that the reputation token is totally useless. It's built on top of Ethereum that has its own crypto scam versions for the same reason. Now, in one of my crypto scam Ethereum episodes, I said that the only use case for smart contracts and Ethereum in general is assassination markets. There's absolutely no other use case for Ethereum that exists. And looks like Augur is going into this direction, but there's just a project on top of Ethereum. So your just general thoughts on this, and then I have some specific questions, but this is going to be very, very interesting. And this is probably not the kind of attention neither Augur nor Ethereum wants, because there are centralized people that put together these things, unlike Satoshi Nakamoto, who's invisible. Drew, go.
Sure. So Augur is sort of like a betting market, sort of like a prediction market where people vote with their assets as to the probability of something happening. You're allowed to open up your own market, which basically tees up the conversation. And these assassination markets appear to be people placing votes as to whether somebody's going to be killed or not. And parenthetically, what monster puts Betty White on there? I mean, come on.
Yeah,
but anyway,
pretty bad.
Leaving Betty White aside, obviously, if this implicates a lot of really interesting issues, the first of which is whether Augur bears any responsibility for creating a situation where people can place bets on whether someone's going to be assassinated or not. What's the problem here? Obviously, if there's a lot of money involved, somebody can make a huge bet for the assassination of a person and then go kill them, and it's in their financial interest to do so. Obviously, that's illegal, and these are a lot of things that we have laws to try to prevent. It's per se mala, meaning everybody knows it's illegal and it's bad, and it's also against the law. So the first question that gets teed up is, what is Augur's responsibility vis-a-vis creating the opportunity for people to put these markets into play? There's a law called the Communications Decency Act that has an exception called Section 230. And it says that it provides immunity from liability for providers of an interactive computer service who publish information provided by third-party users. That says that no provider or user of an interactive computer service shall be treated as the publisher or speaker provided by another information content provider. And this is the same exception that lets people that host websites that have revenge porn and that host stolen trade secrets and other things avoid liability. And they do so by claiming under this exception. They have to prove that they're a provider or a user, that they are not the publisher or speaker, they're not revising it, they're not editing it, they're not participating in the conversation. It has to be provided by somebody else. So they can claim that they're not liable under Section 230 of the CDA. The problem becomes that there are exceptions, which include if it's a violation of IP, which is intended to make sure that there aren't robust markets for trade secrets being sold. And it doesn't apply if it's facilitating the violation of a federal law. So if there's conspiracy for murder, perhaps here, then the CDA exception may or may not apply. This brings up what I think is an even more interesting question, which is speech an element of conspiracy? Conspiracy means one or more persons working together, each one making an overt act toward the commission of a crime or a violation of the law. And there's a really fascinating area of the law studying whether mere speech by itself is enough to be a overt act in furtherance of a conspiracy, and there isn't really an answer. So it's a very long way that David's gonna make fun of in a second of saying that Augur is playing in dangerous territory here. There's an argument to be made that they are liable if something bad happens and there's an assassination market related to that bad act, they are arguably creating a situation for somebody to put a large bet on the murder of somebody else and then kill them for their own gain. We can have all the same arguments that decentralization wipes everybody's hands clean. I don't necessarily buy that. And then the last point that I'll tee up for everybody else to discuss after I bounce off in a second is that Augur's got a kill switch, or at least up to a point had a kill switch, where at any given time they could kill the smart contract that held a market, return everybody's money back. So the question becomes, does Augur having the ability to quash the market altogether, shut down the assassination market, mean that they can control the message? So a lot of questions, no answers. Tone, thanks so much for having me. David, Sasha, everybody else, it's been a pleasure. Take care.
Sure.
Great answer to that, by the way.
So I'll kind of jump in since everyone's sleeping again because Drew just spoke. So we talked a lot about this last week. We were talking about the YouTube case and the Communications Decency Act, because that's how YouTube's going to try and get out of the BitConnect lawsuit. Augurs, what they're doing is a little bit different. Let me give a slightly different example about the assassination market. Forget about Betty White. When I filed the Tezos complaint, I got a bunch of death threats. Can you imagine if some 15-year-old in Maryland, who was one of the people who threatened to kill me because we filed the Tezos complaint and thought he was going to lose his $100 investment, goes on to Augur, gets a contract where he's going to get paid if I die, and not even a famous person, and the guy comes out and kills me. And then this guy gets a double collect off not only killing me, Tezos, which he didn't understand the lawsuit's not going away, and bam, now he gets to get paid because David Silver is dead. So I think that this is not the equivalent of publishing a statement that's going to be allowed to stand. This is, you're not allowed to go on Facebook, you're not allowed to go on YouTube. If you publish a video right now when we all get off here saying that you're going to kill Manny, Sasha, and David Silver, and you're going to kill them, and you're going to try and pay a reward to whoever kills us, that is different than free speech that's allowed to be published. And there's a failure to warn aspect. So now we're talking about, well, for years, Howard Stern has had a death pool. Isn't this really, without the payment structure, the equivalent of a bunch of people on the radio talking about the death pool for 2018? I'm sad to say I don't know who's in Howard's death pool in 2018, but Howard's talked about this for years.
But good question. When Howard talks about it, does he mention which names are there, or he doesn't mention the names?
No, he totally.
He does. Yeah, he does.
He does.
Who's going to die?
Betty White or something, right? Yeah. Betty White's always in a death pool.
So when you take that, what's the difference between what Howard Stern is doing and what Augur's doing? Well, they got the smart contract where they're paying people to be part of the death pool. So let's take the murder aspect out of it, because I think everyone agrees the murder is illegal, and there might be some type of implications off that. So is it because now you're actually paying someone, and now let's ask the gambling aspect, which is always going to be huge in crypto. Are you allowed to legally gamble through the smart contract? There's so many problems with what they're doing. And the biggest problem they're going to have is, I agree with what Drew says, they had a kill switch. I personally believe they still have a kill switch. I personally believe almost every single decentralized platform that exists today has a kill switch. I don't believe in decentralization
except one.
Yeah.
Except Bitcoin.
I mean, come on. I mean, like, do I honestly believe that Vitalik? And I keep on picking on Vitalik today. Let's talk about Gemini and the Winklevoss twins. They have an effective kill switch because they hold so much Bitcoin. If they unleashed it today and squashed the market, Bitcoin would go down to $1.
Absolutely.
They're more powerful than certain countries at this point. So going back to Augur, I think they have some responsibility. I think legally they're going to have responsibility. I think that a guy like me is sure as shit going to file a lawsuit if someone gets murdered and Augur pays it out through the smart contract and the platform works.
Yeah, I'll jump in here, and I've got to go in a bit. So I agree with David's comments and Drew's comments. My concern is, kind of jumping between kind of morals and the law, right? So we're into this environment where there's a lot of issues with speech, and there's a lot of issues with kind of what we can say, how we could say it, on what platforms we could say it. My ultimate concern with Augur is the fact that, you know, there's wagering on, so there's money involved, there's consideration, there's pecuniary interest involved in this, as opposed to me expressing myself, wrapping myself around the First Amendment and expressing myself, wanting to post something on a website and being able to defend what I say, because that's what I truly believe. And that website, that platform, publishing that, right? I think that's different than what we're talking about. And I think it's markedly different, right? I think the issue with this is, you know, really what's the true benefit of this and the true purpose? To me, it's just to get attention. It's just to create a lot of noise and a lot of static that people would generate interest, and hopefully for their purpose, have people, you know, place bets and wage and generate more open interest. I'm just concerned about the kind of precedent that this sets. But, you know, to David's point, I listen to Howard Stern. I've been a big Stern fan for many years, and Stern's always had a death pool. But it's, you know, done where the guys on the show kind of bet each other and bet Howard. There are no smart contracts involved, and there's no publication. I just have a real big issue, particularly in today's environment, you know, with the kind of craziness in the world and what's going on. You know, we promoting more hate speech, you know, in a Facebook environment with Cambridge Analytica, where now like Facebook is policing Facebook and removing things that people post or blocking people from Facebook. So to me, you know, these are at ultimate, you know, opposite extremes, and we need to find a happy balance and a common ground. I'm just concerned about this in terms of like, what message does it send? Overarching, you know, the overarching principle to me would be, you know, what message does it send for the crypto community? I mean, does this help us or hurt us? And unfortunately, I think it hurts us.
Sasha's going to take the flip side so everyone continues to love her.
Well, for this, I was reading a lot on Reddit last night about it, and there were people saying that there is no way that they can, if what they said about the kill switch is correct, 2 weeks ago, they, you know, did this kill switch. So now they have no way to get these kind of bets off of the system unless there is something where the people that go on and I think it's the Oracle, they can somehow program that to not answer these questions. So it comes back down to that whole centralization or decentralization thing. And I think from a marketing perspective, one, this is getting their name out in the press a lot. But two, if they did shut it down so that there could be no assassination markets, it would prove that it's a very centralized thing. And then if there's any other future things that are questionable, then we know the team has the capability to, you know, give a yes or a no on whether or not the bet can happen. So they're in a little bit of a predicament here. And I just thought it was funny going through their website, you know, when they're talking about it, they're like, oh, this is going to be used for weather prediction or event hedging. And they must have seen this coming. You know, I think it was even talked about long before they got going that there were going to be assassination type markets on here. And I know Jeremy gets up on stage at the Miami Bitcoin conference talking about what a great use case for Bitcoin Silk Road was, and how Augur is going to be a great use case here compared to a lot of the speculation. It's a time where people can actually use the crypto, you know, for what it's other than just trading it. And I wonder, like, the same way that Silk Road, that Ross got in trouble, is this going to be like, will he get some kind of, as you all kind of mentioned, there's the conspiracy here where if he's furthering, or if any of the team is furthering the crime, if the crime takes place, and now they put a financial incentive on the crime, you know, I think it's dangerous. I think they should shut it down. If, you know, who cares about the reputation of being a centralized project? I think they should get this down off of there. But some of the bets are really funny. I was scrolling through them. One of them is whether or not God exists, and that we're going to know. Funny. I was like, well, how are we going to know that?
How do you prove that? How do you disprove that?
Right.
And then I think the biggest one on there is whether or not Ethereum is going to be over $500 at the end of the year.
Right, but so I'm going to jump back in here. So a couple of things that you mentioned, right, Sarah? Sasha, and you said that, hey, when I go to their website, are people like completely oblivious to the fact that all of this is on a centralized website? Am I the only one? Like, and this is why I was gonna mention Ross as well.
Place a bet, you have to get the MetaMask and download it off GitHub. But then they have a website that you can just view things from.
Correct. So, like you, yeah, sure. If you understand computer science and you understand programming, you can go ahead and make the bet. But the majority of the people, they're not gonna, they need that website, right? So first of all, and someone is administering this website. So just like Ross Ulbricht got in trouble for administering a website, it's very easy for you to know who will ultimately be responsible for this if you don't want to go after the creators of the token, which they should have done when the token was being created for security laws, regardless of the Augur, regardless of the use case of the platform that they were building, because just like all the other ICOs, they were an uncompliant security. But besides that, if you don't want to, again, if the SEC, because the SEC didn't step up and resolve these things from having this kind of funding, first of all, this probably wouldn't even exist. Then we can bring in a bunch of blockchain experts that are going to talk about how the damn thing is still centralized, how the damn thing is built on top of a centralized platform called Ethereum. And it's completely to no surprise as to why the assassination markets on Augur are popular and why, for me, it's still the only use case for Ethereum, because it's the only like contract that is at risk of censorship. For obvious reasons, as has been already discussed. And because all of these other bets, either they're silly bets like, does God exist, that have no answer, or they're bets that have an answer, in which case a centralized oracle will do a better job. Like, why in the world are you going to decentralize who's going to win a basketball game when you know the results from ESPN as the oracle who will tell you who's going to win the basketball game? Not to mention, you can have a website where you can place a bet on that game. So again, outside of assassination contracts, I just don't see why in the world anyone would use prediction markets.
Yeah, great point. Hey, I've got to run. Thanks, Tone. Thanks, David, Pleasure, and Sasha.
Bye.
Thanks, Manny.
Thanks. Have a great day. Thank you. Bye, everybody.
You know, it's kind of interesting that one of the good points that I thought Sasha brought up was the marketing aspect of this. I mean, they basically have the equivalent of a viral outbreak for the assassination markets. I mean, that's probably increased their people who know about Augur. My guess would be 99.9% have gotten into this because of the assassination markets. Those people who are hitting their website, I don't know what their actual use uptake is based on it, but certainly they've gotten a lot of good press on this. Two, well, we can
a lot of press. I don't know if it's good.
Well, all press is good press.
Okay.
You know, this isn't bad press for them that people are betting on Trump dying. Like, you're hitting three big buzzwords: Trump dying, assassination, you know, murder for hire. You know, can you actually pay someone? Like, you find someone who's placing a big bet on Augur for someone to die and now go onto Craigslist and go hire someone to kill them. That's such an obvious thing. I don't think, I'm going to presume, I like to presume the best in people till otherwise. I'm going to presume that, one, it's centralized because it is centralized. Two, I think that, you know, it would be really funny, you know, when they say Vitalik again, just for shits and giggles, is somehow he comes in and he's like, this is awful. This is the worst. You know, Ethereum wasn't meant to be, you know, piggybacked on for this. But I just don't think at the end of the day, this one's a particularly sexy one that's going anywhere. I don't think the government's going to come in and really look into this. I think that this is going to be one that slides through and just fails on itself.
Mm-hmm. Unless we get a murder.
I don't know, David. I can see the government saying, hey, SEC, you know, if there is an ICO you may want to, you know, make an example of, maybe Augur is a good one. Like, I can see that nudge.
Let me see if secret David Silver files can confirm whether or not Augur is currently being investigated by the SEC. Secret David Silver files say.
All right, Sasha, go for it. Thoughts?
Wasn't their lawyer a very prominent lawyer in the Bitcoin space at the time of their ICO? So it's probably a fairly airtight offering as far as that can go. Or what do you guys think? I think it was Marco.
I would love to get Marco on this show.
I can guarantee you Marco has an anti-David Silver rule. Apparently saying someone should go to jail and be indicted is a reason why he won't publicly sit next to me. But, what can I say? I think
they did it as a foundation too, the same way as Ethereum. So it was like everyone was donating the money rather than investing it, or if that would hold up or not, we don't know. But
do you do it at Cooley, or do you do it at they did it when it was at Cooley?
I think it was at Pillsbury Law or something.
Well, he was at Pillsbury, which was Shaw Pittman before. I just can't remember if it was Shaw Pittman, Pillsbury, or Cooley when I think it was at Cooley when the ICO happened. I can't remember. That part's meaningless. That's just lawyer, porn about which big firm is going to be responsible when this all goes down. As I was joking about earlier today, I think the Augur market should be who's going to be the first SEC DOJ joint indictment. You can put Marco on that list. I think a lot of people are going to take Marco as the gatekeeper who Chairman Clayton constantly talks about, that's going to be held accountable for all the unregistered sales of securities. I put a Bitcoin on that if I had a Bitcoin, but that'd be wrong. I don't really. I mean, who knows what they're gonna do? I don't think Augur is the one they're gonna go after, though.
Yeah, David, but that's the thing, right? Like for a bet like that, like if it was relevant and important, why does it need to be decentralized? You can just centralize the bet from the beginning. You didn't have to spend 3 years building this platform on top of Ethereum, which we all agree, if Ethereum wanted to remove the rep tokens from the Ethereum platform, they can do it in an hour.
Well, but this is where you and I probably agree on this. 98% of the things that people claim benefit from decentralization, I don't want decentralization on this one. I would want my money someplace that I know it's secure, that if I'm actually placing the wager, I can get it back. I want someone to be able to sue if it goes wrong and someone steals my money, not, it got lost in a smart contract. And there's no one to hold accountable for it when it goes missing.
Yeah, no, we agree on that. And on top of that 98% situation, 98% or almost 99% of all of these decentralized projects are not even decentralized.
Of course not. You want to know why they're not? You want to know why they're not decentralized? Because people want to drive Lamborghinis. And if you want to drive a Lamborghini, the only way to get your Lamborghini is to have control of the system and collect the money and be the one getting paid.
Right. The only thing that's decentralized in this whole operation is the decentralization of you being separated from your money with almost no recourse, other than maybe David Silver.
See, now there I completely agree with you. Because at the end of the day, why is Arthur Brightman now supporting KYC and now supporting turning it into a security that was regulated under an exception?
Oh, I'm sorry. Which one is Arthur Brightman again?
What?
Which one is Arthur? Who's that?
The Tezos co-founders are Arthur and Kathleen Brightman.
Oh, okay. No, I had no idea. Okay.
But the reason why that it's so important that Arthur is saying, even though he was an anarchist and a libertarian who says I was anti-KYC, but now you have to do it because this is what the lawyers say. No, he's supporting it now because at the end of the day, he wants his $200 million. He's now become a capitalist.
Right. It's the thing. They all believe in this idea until they realize that the only way they can make this idea work is to stand, in front of is to announce it and promote it to the world. And when you do that, you can't actually do that, right? So this is what separates Satoshi from everybody in the space.
Well, yes, it is. But also, can you wait till he takes out his block and goes spends it on something?
Well, I think it would be great. Honestly, I think it would be great if the Winklevoss twins sold all their coins. I think it would be great if Satoshi sold all the coins. Even if the price of Bitcoin dips in the meantime, it'll decentralize the coins around the world and who holds them. I have no problem with that.
Oh, I mean, this is the funniest part about crypto. All these people who talk about, decentralizations and the perks. just like fiat money, crypto is centralized amongst the small few.
Yeah, and right now, Bitcoin is miles ahead in a decentralized spreading around the Bitcoin around the world than any other token. Like all these other tokens are 10 times more centralized in the hands of a few than Bitcoin is. All right, any final thoughts on this? I am still doing screen share. I mean, this kind of takes us to Ross, right? Because, well, first of all, speaking of assassinations, it looks like all charges or all accusations of Ross involving the potential or alleged hiring to do an assassination, those charges were dropped, and this potentially creates an interesting situation. But now that the court case is not being retried, it's just like things could not fall like worse for Ross in terms of timing, right? You can't mention the three corrupt agents during the trial. You didn't even know about the third one publicly during the trial until after. I was at the hearings for a retrial, and the judges are going off about the assassination charge, and now the assassination charge has been removed. I think that played a huge role in the judges deciding not to retry the case, and now it's been dropped. Like, can things go any worse for Ross?
Well, I'm not sure legally that's exactly what happened. The Ross's appeal got denied.
Right. So I mean, the appeal got denied. But I was at the hearing,
but the Supreme Court then denied to hear the denial. So what the Maryland Attorney General said, it'd be a waste of our time convicting him again for something he's already been convicted for, an additional punishment that can't be worse than he has. So it's not like they said there's. I don't want to get blasted for being anti-Ross here. I'm just saying the dropping of the Maryland indictment was done because the New York conviction was upheld and the Supreme Court refused to hear Ross's case. So it's not like because there's no place else to go with the New York conviction. He's staying in jail for a very long time, and they dismissed the other federal charges because it was based on the same conduct. So.
Oh, I see. Okay, I understand it from that perspective now.
Yeah, I mean, it's why beat a dead horse? He's a dead horse at this point. He's in the gray. I mean, he needs some type of fortuitous miracle. Maybe Manny getting elected governor of New York and then president of the United States, since these are federal charges. He needs a crypto guy to come in and pardon him. I'm not thinking this is going to be Trump's pardon on a crypto-related thing. That's the Hail Mary he needs now.
Yeah, and there's one more possible thing that could happen in court, but everyone says it's such a huge long shot. There's a 2255 motion, and that's for ineffective assistance of counsel. But I think it's what Jason was saying. I wish he was on here to talk about it, but he was saying that should have been brought right away at the time of either the first trial or the appeal, rather than bring it now. But they do have a year that they can bring that, and then I think you can also bring it's partly that and partly the Brady motion. So any evidence that exculpatory evidence can be also brought during this 2255 motion, so they can talk about the corrupt cops during that. But I think it's everyone that I've talked to about it have said it's such a long shot that even Lynn or his mom, I don't think she's holding out a ton of hope for it either. After the appeal got denied, now they're trying to they're changing their philosophy around publicity. Like before, Ross was staying kind of quiet, not doing interviews. And, they were told by all their lawyers that could possibly interfere with the case if Ross became public. But now that that's over, he's got this Twitter account going, and they're trying to get everyone to sign this petition through change.org. And maybe, Tone, I don't know if you'd be willing, but maybe you could put the link in the comments or in the live chat or something like that, so that we could get some of your audience to sign too. But I think they are hoping the more people sign that, the better the chances of getting a pardon are. And it's still a pretty long shot, but like you said, you know, he needs a miracle, and that's the pardon is kind of the best possibility. And it's kind of, yeah, he's just had such bad luck like that. You know, they were holding the review pending on the outcome of Carpenter, which was looking at the Fourth Amendment violation, saying that basically you need a warrant to track cell phones. And Ross's case, you know, he was on a laptop, not a cell phone, so they were tracking his internet browsing history. And, you know, they decided that's not an important question, but the question of tracking cell phones was important. To me, they look so similar that I was holding out hope that they would, you know, review this and decide, yeah, we need a warrant to review your browsing history. And if they had have decided that, it would have been back to trial.
Well, did that case have a decision now? The case over the cell phones?
Yeah, I think they decided that they do need a warrant to track the cell phones, but they don't
track the cell phones, or even look what's inside the cell phone.
It's, I think it's like the search of your cell phone usage, like for them to track. I don't know. I haven't actually read the full Carpenter case. I'm just going off.
We should probably cover that on a future show, because I'm like hearing like situations where if you were like in a car accident or something like that, the police now have some kind of a device where they just connect it to your phone and they know exactly every second when, if you were or weren't using your phone, what applications you were running, in order to judge whether you were, say, texting at the time of the accident. So for something like that, would they now need a warrant, or will there be a clause for that specific case? And then let's say if they discover something else on your phone, let's say pictures of something, potentially another crime, or implicates you in a crime, would that be admissible? Because that obviously isn't the sort. I mean, like, there's a lot of implications here.
Mm-hmm. And I guess like from their perspective, if they're using the cell phone tracking for the greater good, they're not going to want to require them to go to the judge and get a warrant to look at each cell phone as it comes up. So there probably is some caveat carved out there, but I don't know the extent of it. But
you're talking about two different things. On the investigation, the warrant isn't an issue because you're doing the investigation. Like for Ross, for instance, they already had the warrants, and they already had the subpoena power. The investigation. Once you go past the initial act, it's a different standard about taking information that the police aren't rightfully belonging to. But in those cases, more often than not, you already have it. You already have the authority to do so. But it was also, let's be clear, it was also a different world when Ross got in trouble, indicted, and technology's far different today. He did a bad thing and he got in trouble, and whether or not he got in more trouble than he should have is a decision between him and God, not up to me. The New York judge did not do him any favors, and you know, he's going to be in jail for a very, 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 very long time.
Or he's going to get a pardon, or we're going to win this 2255. You never know. My law clerk is this week and last week has been printing off every document that's ever been filed. So we're helping Lynn get that thing together. And I don't know. It's a long shot, but you know, he needs something.
That's why they play the game on Sundays. You got to play the game. You know, everyone's entitled to their long shot and their hope. But if we're on Augur, I'm taking the other side of this one. Hope for the best, prepare for the worst.
Well, right. Since you circled us back to Augur, if you are involved in programming Augur, and first of all, this was obvious and known that this is what's going to happen with the Augur platform, why aren't you a little bit nervous that for the same reason why Ross is serving 2 life sentences, if you are even managing the website that is publishing those assassination markets, your fate could be the same as Ross Ulbricht's, no?
Yeah, well, yes, but it's a little bit different. Let's go the other way. What about insider information? What if you're the nurse in the hospital with Betty White and you know she's about to die?
Oh, no. It says specific, not of natural causes.
Oh,
what if a nurse gets an inkling? Put a little too much medicine in.
There you go. I need another example of not natural causes then. You're the driver watching the person and say, hold on, before you push them, let me. So the other person goes to jail, but you're sitting in the car, and it's a Seinfeld. They don't, and you're not a good Samaritan. You don't help out. You watch them push the other person off. Yeah.
All right. Anyway,
So just one quick comment back on that. So the reason Ross got such a long time was because of the conspiracy charges, which means he got charged for every crime that happened on the website, because by enabling the website, he furthered each one of those crimes. Well, what all are the crimes involved in this assassination market, like the murder, but also are there federal gambling laws that are coming into play that might be being broken through this online betting? So
I would assume every one of them, right? Because if you are, there are some laws if you're going to run a gambling operation, and every one of these things is a bit of a gambling operation. So there's no way they're filing with they're not complying with any of those laws. So yeah, I would think it would be whoever is managing the Augur website could face a very similar charges of Ross if the website grows big enough, right? See, here's the thing. If the Augur, the project, dies next month, no one cares. But if it grows to the size of Silk Road, then there will be another Ross, whoever is managing the Augur website.
But and they also need to be making sure everyone's over 21 for the gambling too, which I doubt they are. But there's been other cases where people, like there was that Silk Road 2.0, which was way bigger than the first Silk Road. And they had the guy arrested for that, but he only did 2 weeks and he got off. So I think there's some unfairness level that went against Ross that probably wouldn't happen to anyone else. Well, who knows?
Yeah, no, having a deja vu moment. I think we've covered that same thing already in the past. But yeah, no, that is absolutely true. All right, hope you guys have a little bit more time. I wanted to cover one more subject, assuming I'm still on screen share. So Professor Dave Hoffman published a 100-page. I did not read this, but like I knew what the end result's going to be. But basically, here's what they did. They took a look at 50 ICOs from 2017. They looked at some of the bigger ICOs, and they took a look at their white papers. They took a look at their terms and conditions and their prospectus. They took a look at the available code of those projects, and they took a look at as many social media posts as they can. And here were their findings. So 37 promised vesting of that money. 80% didn't code it, right? So they promised they weren't going to sell the ICOs and it would be programmatically in there. 80% didn't do it. 32 out of the 50 promised supply restrictions. 25% didn't code that in. 17 promised burning of coins. 35% didn't code that in. And of 10 with the tokens that could be modified, like Bancor, only 4 disclosed the fact that they were actually modified. So basically, and there were other, this was the general idea, right? So I actually read the abstract. I wanted to read the whole abstract for the audio viewers, but or the audio listeners, I should say. But basically, they wrote a 100-page paper. The paper, all of this is linked in the bottom of my video description. You can go ahead and check it out. And basically, they took a look at all the terms of all of these ICOs, and I guarantee you they're all garbage. Like, this is what I'm saying. I took a look at approximately maybe 100 ICOs between 2016 and 2017, and I saw maybe one that I said, hey, this is not a scam, but a terrible investment. Other than that, like nothing is happening the way they claim it is. All it is them pumping the coins. And you can see right here that 80% of those that said that they would actually code the fact that they can't immediately sell the ICO tokens did not code that in. So they can immediately sell those ICO tokens. And I guarantee you, if they coded that in based on the other part, they can always change the code because they're all centralized at the end of the day. General thoughts on ICOs? I mean, I feel like I'm on an island here calling every ICO some kind of violation of everything involved in investing.
Mm-hmm. I think one of the important things to, well, I don't know how important it is, but one thing they did mention is that it was 14 billion that was raised over 18 months, and Facebook raised more than that in one day in 2012. So we're still dealing with a small scale amount of money compared to the traditional stock market. But I think that's like a very side point to all this egregiousness that was outlined here. And I remember meeting, I forget it's bad, I forget his name, but he runs Hosho Advisory or Hosho. They give a seal basically on the ICO, and they have a hacker go through the whole project and try and break all the smart contracts. And it seemed like a service that everyone should use, and that anyone going on an exchange with their token, maybe the exchanges should require some kind of level of assurance that these smart contracts are what they say they are. So reading this and seeing that all these things that were programmed into the smart contracts never actually happened or whatnot, you know, it's pretty bad. And I don't know how to look or read the smart contracts myself. And I think that's something as a lawyer, there's probably going to be some kind of demand for in the future that lawyers read over these things and make sure that they're operating like they should. So my goal is, you know, in the next year or so, I need to learn how to do these smart contracts myself. But wait, David's got his sunglasses on now.
Did you guys ever see that Friends episode where Joey tries to play an 18-year-old kid and everyone's like, Joey, you're not 18 anymore? I kind of feel that way. Cool. Like, they finally stated the obvious. Everything's a scam. Nothing works. I've been saying this for like 4 years now. 99% of these things, I just don't understand why anybody invests real money. Well, it turns out it's just recycled money, but forget about that for a second. Most importantly, should we be surprised by this? No. This is going to circle back all the way to the beginning of the conversation today. The beginning of our conversation is about accredited investors. Even accredited investors do stupid things. Here, this whole market is stupid investing. I mean, is there a potential for a Netflix, a Google, a Yahoo in some of these ICOs? Absolutely. But Manny had a good point. Basically, you know, 90% of all businesses fail. Venture capitalists invest in 10 companies. They hope for the moonshot on one of the 10 to compensate for all 10 investments, the other 9 that fail. My point being this. Yes, I'm not surprised by this. First of all, I always say this, it's always amazing to me. In the $14 billion, they count Tezos. How is that possible? Tezos was, as we all know, just a donation. I constantly send that to my friends at Coinbase on their little like graphic showing how much money was raised in crypto and ICOs. They have Tezos as one of like the third largest circle. I tell them that's not fair. It's a donation. I'm going to hold them accountable and sue them because they're misrepresenting to the public what is and what is not invested. I think this is the most obvious statement of, I think their numbers might even be conservatively low. That's how obvious I think the work product is.
I'm no argument here, man. I've been railing on the ICOs since the day of Ethereum, man. Like since the Ethereum ICO, I've been on the same train, man. I thought the Ethereum ICO, and that's the thing. We had Adela on the show, and we had a couple of other people on the show that actually, you know, gave money to the in the crowd sale of Ethereum, and not thinking of it as an investment contract, more thinking of it as a donation. And I wonder how far that argument can go for Ethereum or all of these other ones. I mean, after Ethereum, there's no way anyone can claim that all of these people were donating money to us. I think Ethereum would have been in such a better position if they never gave away those Ethereum tokens, because they probably could have raised $3 or $4 million on donations from people, again, like Adela, who's on the show. And they could have avoided this.
Maybe my Tyler can afford some clothing to wear at the next conference. I'm not saying it has to be nice clothing, but I don't dress particularly nicely. But dude needs a little bit more than shorts for the skinny legs.
But yeah, I think Ethereum might be the only one that can actually go to court and claim that people gave them money without an expectation of profit. I don't know how anyone else can possibly claim that.
This is one where some of this stuff is just such outright fraud. One of these days we're going to talk about like just the exchanges themselves still committing outright fraud. We can talk about the whole ETF situation, how you can't base something on these exchanges which are unregulated. The fact that the ICOs failed and it's supposed to be a trustless system with fluid transactions. Every time someone talks to me about coding a smart contract, I always say it's really great. Why is it that people believe that anyone can code a smart contract and it's going to work? It takes a tremendous amount of sophistication to create an actual smart contract that could withstand the test of time. I'm not a big believer that this is just any group that you go to or anything that people use the word smart contract synonymously, that every single one of them are the same thing. And that these ICOs, when they start throwing around the marketing verbiage, that they are the same people who refer to it as the blockchain, not everyone has their own blockchain. So once they start talking in singular, that's just marketing, and this is all fluff. I mean, even the ones that seem to be successful now probably won't be around in a year.
And I think there's a problem too, because there's no way to really test the developers unless you have some kind of, sophistication level yourself. And a lot of these people that come out with the ICOs have, they have a little idea of, this thing might be made better with a blockchain, not fully understanding what the blockchain is going to do, that it's going to make it more expensive, slower. They can do what they want on a database, but as soon as you add the blockchain into it, it's going to be something that you can market, or in 2017 you certainly could by having that name on it. And then they think Ethereum's so easy to use, or they think they can hire someone else to do their smart contract coding. And from what I've seen, there's no test is that you just have to trust that that person that's doing the smart contracts is good. And how do you know whether they are or not? There's no way I can know if this person doing them is. I just have to take the word. Okay, those smart contracts are there, fine. So that's, I think, a big problem.
Yeah, well, no, I don't see that as a problem at all. I don't think anybody cares. That's my point. My point is nobody cares that they're even smart contracts. All they care about is that they can resell these ICOs for a profit. Again, no different than the .coms of the 90s.
This is the sock. This is the pet sock. Where's that sock is now more valuable than the company.
That's a good way of putting it. All right, guys. I was thinking of talking about FinCEN, but I think we can go ahead and wrap this up.
Yeah, Dave, I got to run.
Yeah. All right, guys. Hey, Dave, thanks for sticking around the whole time. Sasha, thank you for joining us. You were joined at the very end of Accredited Investor, so you didn't get the comment on that. But hey, guys, thank you for watching. I will put that Ross petition into the video description as well. And all of these links are in the video description.
Okay, awesome.
Bye, everybody.
Haircut. And can I say thank you again to Block Spaces for letting me use the studio? And they really want you to come give a course here, Tone.
I know. Shout out to Blockspace. It'll have to be next year. Unfortunately, I don't have the time this year to make it down to Florida. But next year, looks like Tampa for a trading workshop over at Blockspace.
Nice.
Cool.
Bye, everyone.
Bye.